And so thanks everyone for joining us, and very well pronounced, Roshan, of all the names. So I think we will just start with a quick presentation by Turkey, maybe just a 10-minute presentation, because Turkey is probably a market that is not very familiar with most of the attendees and even for myself. But in the meantime, as the presentation goes, as we have our discussion, feel free to type in any questions you may have under our Q&A tab. With that, I'll hand it over to you, Ali. You can share the screen.
Hi, everyone. Thank you for listening to us. We are going to explain to you what are the macroeconomic situation in Turkey generally, and what are our expectations, and what is the impact of inflation that we see in the last couple of years, especially in Turkey. Well, let me remind you that Turkish people are not stranger to inflation. We also happen to live through inflation through some 10-year periods or something. So we may suggest that Turkish people, normal Turkish people, Turkish investors have somewhat are somewhat used to how to tackle the inflation issue. Turkish government has been implementing some loose monetary policy in the last couple of years, which resulted in quick depreciation in Turkish lira, which also resulted in high inflation, coupled with the global inflationary trend, because Turkish Central Bank continued to keep its rate policy very low. We see the depreciation of the money and inflation going up, especially Turkish. Okay, let me continue with the presentation. Turkey's economic outlook is predominantly depending on elections right now, and we actually had an earthquake disaster which shaped the future expectations of 23 a lot. So the policy of the central bank monetary policy will be changed on the result of the Turkish election. But we presume that because of the pressure from the macroeconomic values, whether the opposition or the ruling alliance will gain power after the elections, they will have to change their monetary policy to a more orthodox view. So the loose monetary policy implemented by the Turkish Central Bank will have to change to control the inflation at least. So and because of the earthquake, because of the all the restructuring process needed for the area, apart from the monetary policy, the fiscal policy will also have to continue loose, so that we presume that these opposite forces will balance each other in the 23. So in 22, we current account deficit in the 22 was 5.3%, which was the highest in the last 10 years. The downward trend in energy prices that we see today after the surge in 22 and the monetary policy rate increase, a possible monetary policy rate increase in the second half of 23, may curb the current account deficit to GDP ratio around 4%, we presume. A good budget discipline in 22 resulted like as 0.9% budget to deficit ratio and 1.1% primary surplus to GDP ratios. The efforts to recover the earthquake damage and the possible rise in cost of financing may cause larger budget deficit in 23 and reaching around 3% of the GDP, which is normal because this is what we expect with the implementation of fiscal policy after a large earthquake. According to Bloomberg, Turkey's GDP growth is estimated around 2.7% for 23. The CBRT survey is around 3.5% according to local survey contributors. But keep in mind that these growth estimates may be revised up because of the policy changes after the earthquake. Electricity consumption data, which can be seen as a early reminder of the economic activity going on in the first quarter, suggests a weak first quarter for Turkey, but fiscal expansion may pave way stronger than currently expected GDP growth in 23, we expect. So we see some graphs about consumer price inflation on the left. We see that it has surged a lot, and the expectations are that around 2025, it would reach around 20% again. Well, in the situation of Turkey, currency depreciation was the main reason behind the rising inflation. Also, the global trend of rising energy costs played a part in it. Also, currency depreciation creates a trend to increase the prices of imported intermediary goods, which actually Turkish industry really depended on. Therefore, producer prices hit 158%, which is huge in October 22. The latest read of as of February was 77%. We may see further drop going forward as lira has been more stable since 22 summer months, and energy prices, as we know, has been coming down since the start of the 23. Consumer prices remained high and made its peak at 86% in October due to the pass-through from producer price index and currency depreciation, and due to the front-loaded demand as inflation expectations have been on an upward trend. You know that it isn't enough to just control the inflation, you have to control the expectations, what people expect in the future as inflation. According to the CBRT survey, CPI is expected to slow down below 20% in 25. As I already mentioned, a possible change to orthodox monetary policies to control inflation may have a positive impact on it, but because of all the restructuring costs of the earthquake, a loose fiscal policy may cancel that out. Well, actually, we already mentioned imported intermediary goods. Well, Turkey's energy imports are composing much of its GDP. It actually equals to 4.5% of the GDP, long-term energy imports before 22. After the Russia-Ukraine war and the surge in the energy prices, increased that to $70 billion, around 9% of the GDP in 22. Given the current drop in energy cost, the net energy import may return back to the historical averages. Besides, the massive investments in renewable energy sector in Turkey will likely result in a moderation in energy costs going forward. A possible policy rate hike in the second half of 23 may also curb the import demand. While the tourism is expected to be good in 23, it should also provide a marginal contribution. Budget deficit will likely to expand in 23 due to earthquake recovery expenses and probably a slowdown in tax revenues in second half of 23 due to the anticipated slower economic activity. Blended with the high cost of financing, budget deficit may reach around 3% of the GDP in fiscal year 23. This is actually the consumer confidence around the elections. We see that when the implementation of loose monetary policy started and high inflation started to see around 2020, the consumer confidence collapsed, and after 22 we see a return back to the 2019 levels before the election, which is in a couple of months. So we see the actually the market is pricing the similar level within the 2019, which means the 2019 elections were a close one. Around 50-50 chances were given by the media, and we saw that the opposition actually won some major cities in Turkey, and the consumer price index is at the same levels, which means the market is around giving the same chances to the opposition and the ruling party. As we said, the sluggish macroeconomic fundamentals in Turkey hit the consumer confidence starting from 2002, around the implementation of the loose monetary policy. We have seen a strong rebound, but it is not there yet. So we expect a return back to orthodox monetary policies with the implementation of a loose financial policy to cope with the earthquake. This is the actually big cap stock in the stocks in Turkey. We see that the banking index has a 5.4 weight in the big caps, and actually we see retail with 5.8%, glass and industrial textiles around 6 and 7%, and aviation and airlines at 9.2%. So we can assume that banking, retail, steel, glass, airlines, and oil and gas companies, which are all around 5 to 8% weights on the index, have made the are the biggest sectors in the Turkish stock market. So when we turn to the equity markets, we see, especially in the Turkish industrials, starting from 2021, after the pandemic, they have, because of the curve in the global economy, we saw that the operating margins of the Turkish industrial stocks really improved. And then we saw some pullback in 21 due to the diminishing EBITDA growth. Starting from the late 21, which is when the Turkish lira depreciation really started. The higher inflation actually resulted with the companies having higher revenues and higher EBITDA growth rates. Of course, we have to compare this to the inflation and see if the real if they could actually made real returns or not. But on the graph, on the left bottom side, we see that even the inflation-adjusted graphics show good performance. Inflation-adjusted strong equity market performance in 22 was realized due to the operating margin improvement. Equity market had a poor start in 23 due to the diminishing operating performance expectations and driven by both the uncertainty of the pre-elections and the earthquake. So on the left side of the screen, we see that with the blue coloring, the areas affected by the earthquake, it is a huge part of the Turkey actually. It actually weighs 9.3% of the GDP of 21. And we see the sectors that are predominant in the area. In terms of valuation, Turkey stock market has been underperforming its peers, its emerging market peers actually. According to Bloomberg, current PE of the Turkish market stands at 3.35x versus this 7.30x average in the past 10 years, which is huge. We are seeing a huge discount in the Turkish stock markets. Current discount to EM peers is 71% versus 26% historical average. We are well below, in terms of valuation, the Turkish equity market is pricing very low to its historical averages. Anticipated turning back to orthodox policies may bring back foreign investor interest to Turkish equity market, which is very low actually right now. And because so we've said that the Turkish people is not very strange to the inflation. When the Turkish lira depreciation started and the inflation started to pick up, we saw that the prices of the real estate going up very quickly because the depreciation happened so quickly. People had to act very quickly, and after that, starting from 21, we saw a huge trend in equity markets, but still in terms of valuation, as we see on the presentation slide, it is still very discounted. Generally, our presentation is done. We can continue with the Q&A, so I will be able to explain the situation better. Thank you for listening.
Okay, thanks so much, Ali, for that. It was for a brief overview. I think just because most of our attendees are not familiar, so that's why we just wanted to have a quick slide deck just to have a quick overview. But we'll go into more details later. I think later on we'll discuss with Ali on the market makeup and also how's the performance and how are the corporates coping with inflation. But we'll move on to that questions later. So in the meantime, I'll let Ali have some time to rest. So I will just move on to the Thai market and ask our Thai research team here, which to just give us a quick overview of like how's the equity performance for the Thai market this year. What were some of the key concerns or themes so far this year, and also maybe in the Thai market, which sectors perform well and which underperform. Just a bit of flavor of the Thai market. I think Thailand also might have some slides to try to address some of the questions.
Okay, thank you, Paul. Okay, let me share some slides. Okay, please stop sharing.
Yeah, are you able to share screen?
Okay, I can. because Turkey, please stop sharing, and I will share
Oh, okay.
next. Okay, I can overview before. Okay.
Okay, you can.
Okay. Okay. Never mind. Okay, I will talk about the SET index and Stock Thailand index. Now, if that's from this year, we see the SET index is around 1700 point level, but up around from 8% from the beginning of the fourth quarter last year. But at the first month of this year, okay, foreign fund outflow and fear of banking turmoil in the West, however, that make the Thailand stock market into the consolidated mode in February and March. And then index ensemble to slow around 1.18 point in the mid-March before regaining again. So the index finished the first quarter for this year down around 90 points or 3 to 8% from the end of 2020. However, the rise of strong year-to-date stock market came in the USA, in Europe, and some Asian markets. If we compare to the peer global market, I think for Thai variation is around PE 20.8 now, maybe lower for historical average around 17 PE. For this PE lower than S&P 500, Nasdaq, and Nikkei on Sensex. So I think it's opportunity for who interested in Thailand stock market to buy at this level. Maybe
sorry,
I share.
yeah, maybe you can share the screen, Chutikan. I think it's fine.
Okay.
Yeah. I think that'll be helpful. Share? It's okay, yes.
Okay.
Just because there are so many numbers running around, we all can't want it.
Okay.
In the meantime, attendees, if you do have questions, feel free to type in. So, but later, we'll go through the hot topics, politics, of course, which we'll discuss later. But okay, back to you, Chutikan.
Okay. Okay, can you see? Okay.
Yes, we can. Maybe you want to put a full view. Oh, okay. It's okay. It's okay. I think we can see. Yeah. Or maybe you can put full screen if you want to. Yeah. Okay.
Okay, can you see this?
Yes, it's perfect now.
I mentioned you about the stock market, Thailand stock market, the PE of Thailand stock market. That, and if you ask me about the key concerns or theme for this year, I think after the global uncertainty now, Thai's banks remain unscathed by the banking turmoil for this year because the solid fundamentals. So underpinned by the country economic recovery, I think the Bank of Thailand or Central Banks of Thailand expect the country GDP is grow by 3.6% this year, and inflation is forecast to decline to 2.9% in the middle of this year after the peak of last year around the mid of 2022 around 7.8%. That is the currency is okay around 22 Thai baht to dollar, $1 US dollar. So the policy rate is around 0.175%. Also support the economic recovery now, and that key investment theme for the second quarter, I think because we will go to the general election for next month. The first theme is Thailand general election that boosts the consumption and investment for this year. And the second is the China reopening. I think we support Thailand trade and tourism sector. And the third is the geopolitical risk, which drives regulation of production in Thailand. That is the three themes of this quarter and this year too, I think. For the sector performance well and which underperformed for Thai stock market, okay, and for the year to date, I think if you see the picture, we will see that Thailand stock market for the sector performance for the right hand side, that we see there's a positive descending order for the electronic sector, tourism and health and ICT too. But negative return will finance, energy, construction material, petrochemical, transportation, food, commerce, property, and bank. Even though for the negative sector, I think we will focus for the opportunity for this year, especially commerce, tourism, or banking, that will lead to the theme of I have mentioned for Thailand election, China reopening, and geopolitical risk. So it's all about the about the Thailand stock market.
Okay, thanks. So the key theme that you mentioned is China reopening, and of course the election will be some of the key themes for Thailand. Okay, for us Singapore investors, we are mainly familiar with tourism. So I guess rather than we just probably concentrate more on consumers, since due to time constraint and most may not be that familiar. So let's say an investor in Singapore wants to play the tourism theme, because that is Thailand's strength. What are the sectors to play? Like, is it airport, hotels? Like, or which do you prefer? Which is performing better? Which may not be perform better? The various tourism sectors, if you could. Thanks.
For Thailand market, we think hotel could be the better way to play the tourism sector. They have been quick to recover from the pandemic as strong year-on-year rebound, and rise in Emirates movement along with the demand and an increase on occupancy rate, especially during the high tourist season or the festival or holiday. Airport and airline operators are also showing the sign of recovery from the pandemic too. But however, we prefer airport operator, especially AOT, to airline operator, as AOT as a monopoly without competitor on its airport, which are the country's main airport and located in major tourism destination. We highlight Centel as our top pick in the hotel space, while the AOT is our favorite pick in the airport sector. Yeah.
Centel is what? Sorry, some of us may not be familiar.
Centel is the hotel.
Okay.
Stock hotel in Thailand. Yeah.
Okay. Okay. So in terms of, so what is your expectations of a China reopening? Have they arrived? I guess not, because it's still closed. But what are the companies talking about? Will it be they're expecting a strong recovery from China, I guess, in the fourth quarter? Is that the expectations? Oh, I think you're muted. Yeah, sorry.
For China reopening, we think the two sectors have the benefit. One is tourism and the one is property development. In the tourism, the share of the retailer, hotel operator, airline, and airport operator have recovered from the pandemic. But as of the return of the Chinese tourists to the country, they have revived the domestic consumption and tourism. On the property development, China reopening would be a boon for investment. Geopolitical risk could be catalyst for growth as the U.S.-China tension. China recovery economic condition would also help boost demand for product manufacturer in its industrial park. We choose Amata is topic in this sector, and Amata plan to cut down its independence on the ship with revenue mix from non-recurring revenue from land sale to the recurring income from utility service.
Okay, so when you say property, you're referring to industrial property, not residential, it's industrial property.
Yeah, in industrial park, yeah.
Oh, that would be the from investments, Chinese investments into Thailand. Okay, sure. Okay, I think let's move back on to Turkey before we go to the more interesting question about politics for Thailand. So let's move on to Turkey first. I think Ali, I think you did mention a little bit of the makeup of the Turkish market, and I think the largest sectors is oil and gas. But could you mention like what has been performing well this year, at least which sectors, and are there any Turkish companies with international presence and that probably makes them beneficiary of a cheaper Turkish lira?
Well, actually, in 22, electric producer companies stocks really performed really well in Turkey. Around the minimum was, I think, around 450% up in 20. Yeah, but you have to calculate the inflation too. Like the inflation was reached like a high point around more than 70%, and you have to calculate. But it still provided great return. There is no discussion about that. Apart from that, mining and gold companies performed really well. And actually banks, the financial sector, because they were really cheap in terms of valuations. And they actually, in terms of market cap and the role they play in Turkish economy, they are really big. They have a huge contribution. And the worst performing asset class was metal producers because of the global trend and the recession fears and the downward trend in iron ore prices. The metal producer stocks didn't perform well in 22. In terms of international presence from Turkish companies, actually we have a lot of them because of the Turkey's good geopolitical position in the world. We are actually in a position to produce and sell to Europe and a lot of markets because we are in a central area. So we have Turkish Airlines, which is a airlines company which you may have known because they have actually flights to Asia and all around the world. Let me check data. Actually, the Turkish Airlines made around 91% of its revenue from international sales, which is huge, and which actually is one of the reasons the Turkish Airlines performed so well in 22 because of the currency depreciation, the costs of employment and energy stayed low in terms of the international prices. So the operating margins of the Turkish Airlines really grew, especially the recovery after the pandemic also helped within this situation. Apart from that, we have Arçelik, which is a durable goods and white appliances producer, which actually has factories and production plants internationally and both in Turkey, and has a sales presence, a wide sales presence, especially in Europe. We have Vestel, which is again a durable goods company and an electronics company, which has a strong sales presence in Europe. And actually, around 74% of the revenue comes from international sales, which were our stocks that we kept an eye on during 22, because when this currency depreciation first started, the investors were searching for a
exporters, I mean?
Yeah, quick way to store their cash, because it was like they were always searching, because it happened too quick, and of course the FX rate quickly changed, and then after because the interest rates on the deposits were low, too low because of the policy. People actually search really hard to what to invest in, and to actually not to gain profit, but how to keep their value of the money. So their first choice was used cars and actually real estate.
Oh, really?
Yeah. Normally, in a developed country, buying a car is not a great investment, because like when you drive it, it loses its value, and like it's not an investment, but more of a consumption thing. But because of the inflation was so high in Turkey, just getting a credit and buying a car and selling it after 6 months actually provided you with a good credit with low risk. But these windows could close very quickly. The real estate prices went up too quickly. So people after a while started to feel that the prices for used cars and the real estate was too high. So they were searching for what can we do with that. And actually we saw, I think it's a great indicator that the accounts for these stock markets to actually trade and buy stocks historically went booming. Like, I know it's a global trend, but after the depreciation, after the effect of the pandemic actually finished in terms of like investors' interest in the stock markets, because of this depreciation, Turkish investors started to give more take more interest in this stock market actually, and it turned to be right. They were right. They produced good returns.
So what you're saying is that because of the surge in inflation, everyone was just looking for ways to earn the extra return, be it used cars,
Yeah,
or like you said, everyone went to stock. Okay. How low was interest rates when you said the interest rates were lower than? How low was that? Just wondered, when you said.
Like at the start of 22, it was more than 10%, but the inflation was moving high, and the inflation expectations were moving really high. So people knew that, like, at the end of the 22, they won't be able to purchase the same product or the same asset at that price. They were sure of it, and because they were able to get cheap credit, which was provided by the government, they could actually invest. And
okay.
But the thing is, they weren't always trying to earn profit. The main idea was at the same time how to keep the value of the money from depreciating.
Just one last one before we move to Thailand. Like, then why not put the money into foreign currency? There's currency controls, is it? Is that what?
But the thing is, the currency moved too fast, too quickly. In just a couple of days, you know, it is the biggest market, it is the quickest market. In just a couple of days, because before the Turkish investors could turn their heads around, it was like it surged hugely. So, of course, some people still keep their investments as a basket, but most of them didn't like catch the move there.
In
And
currency,
after that,
okay.
because like after the huge surge, the currency didn't move a lot actually. It just slowly grinding up. So it is not a good way to invest right now in Turkey because you lose time.
Got it. So okay, Ken, got it. Thanks, Ali. So I'll just swing back to Thailand before I come back to you on how did companies cope with the high interest rates and so forth. But now move on to Thailand. Politics. I know Chutikan. Yeah, I know politics is. So politics, of course, a sensitive issue. But at the same time, what are the expectations for 2023 and as an investor, especially as a foreign investor, what should we be looking out? Like, what are the scenarios? What may or may not be good for the market, and how to navigate, or maybe it's a neutral event. Yeah, thanks, Chutikan. I think you're muted. Sorry, I think you're muted. Yeah. Okay. Are you able to unmute? I think maybe you got some issues with you. Oh, you're sharing the screen. Okay. I think you're still muted. Yeah, your audio is still muted. Okay.
Okay.
Yeah,
Okay. Let me share the slide. Okay. For the election for next year.
Sorry, can I trouble you to make it full view? Is it okay? The full screen. Sorry, full screen. Yeah, on the top right hand side. Yeah. Okay. That's okay. Perfect. Yeah. Thank you.
Okay, thank you. For the election after dissolution of parliament on last month, Phuket Election Commission says the May 14th at the date of next general election. The upcoming election, I think, is a crucial moment of Thai politics of the one path of economic recovery after the COVID-19. Okay, and the country future development after the election, I think we look at the policy that will support the economic growth as the reviewed economy and sustained GDP growth can be implemented in focus at the policy such as the policy to boost consumption, increase income and reduce expense such as wage high and state welfare and stimulus tourism. For the investment policy, such as the push for the basic infrastructure investment project and the under construction project, and that is to boost the private sector investment and consumption too. For the third is capital market development policy. Maybe if foreigner heard about the implement financial transaction tax, I think maybe the postponement be continued, but not sure when to effect again. I think foreigners would interesting to buy the Thai stock market because the effect of the election rally before and after the election in the next month. If we look at the statistical, I think for the past election show that the set index gained by average 4.7%, and for the 1 month before the elections, set index will go up around 1.9%. After that, the set index continue to rally after the election around 1.3% after the 1 month of election. So for the sector, yes, that the set index 1 month before the election within 1 month, if we look at the stat, we see the professional, media sector, bank sector, ICT and finance will perform well above said, for after the 1 month of election, real sector that yield positive is construction, commerce, food, steel, person, ICT, professional that continue 1 month and 3 months after that. So as I mentioned about the policy that supports consumption and investment, and I think that we would call the foreigner to buy the stock market too. So it's all about the Thailand elections.
Okay, so after assuming I'm not, it's probably it might or may not be the same parties, but what do you think of the like what is the possible outcome for elections? The consensus or the expectations, no? So there won't be any surprise to the market in terms of the result of the election. So what are the expectations? So at least don't need to go too far off from there. But what's the expectations? And assuming that, why would certain sectors do better than next? Is it because the government? I wasn't very sure. You said the government will increase spending after election. Is it how it works? Or before the
Any surprise? I think for the consumption policy, that will I think maybe for the wage rate and policies about the investment, maybe that every party will launch for, and the target of GDP from each party, maybe they look at 5% GDP growth for Thailand, but I'm not sure for that from the next government. They will can do by their target, but I think that many policy that would be help the economic growth continuously.
Oh, okay. So you're saying after elections, they will normally have more aggressive policy. Is it what the fiscal policy and so?
For the, I don't think that I have more.
Okay, sure. Okay, right. Sure. Thanks for that, Chutikan. Okay, I'll move on back to Turkey again. For Ali, I mean, the question we have is, just want to understand how corporates cope with the rising interest rates, in general, and one asset class that most of the listeners here will be interested is how did real estate perform? Not through the equity market, that's real estate in general, rental, and so how did that perform? But firstly, like how do corporates cope usually with the rising inflation? They just raise price in everything they do. Yeah. Just some flavor of how it works in Turkey for the corporates.
Well, actually, the companies, if they can raise price, they raise price. If the consumer will buy without the effect on the demand, they try to do it. But most of the companies, because it is impossible to control price demand very effectively. But the one thing that you can control is your costs. They will definitely go up in an inflationary environment, and you can do like they try to do everything they can to cope with the rising costs. So as we see in the US companies, they try to work around their workforce, but especially in Turkey, because as I mentioned in the presentation, Turkey imports most of its energy. Even electric energy, it has to import the intermediary goods, petroleum, to produce in its plants. So energy is a huge deal in Turkey. And when the Turkish lira depreciated and the global energy prices rose, in terms of a company, it was a huge surge in their costs. So we saw in 22 as national trend that most of the companies started to build their own solar energy systems on their roofs, on their properties, and etc. to actually to be able to control this this high cost. And actually, I think it was a good strategy.
Then what about are there then what were there any domestic companies that couldn't, any particular sectors that stood out that couldn't really pass on the higher prices, or not really? That, like, which domestic? I know you said last year one of the weakest was mining, but that was more like, you know, the global market. But I'm just wondering, for domestic, were there any domestic industries that didn't perform well because I guess they couldn't really pass on the,
Yeah,
not.
But because of most of these companies in Turkey have an international presence, the international trends actually have their toll in it. Like as I was saying, the metal producers, the steel producers, they couldn't perform in 22 because they had a good year around the pandemic because of all the curves of the supply chain. They could turn their stocks they could sell their stocks in a high profit margin, but now the margins are low. Actually, we can say that the durable goods and the white goods sector didn't perform really well because they're mostly selling their products to Europe, and you know, there is there's almost a recession in Europe. The sales are not going up; they are steady or going slowly down. So, but at the start of the inflationary trend globally in Turkey, we saw that the demand actually came before. Like, people decided to buy early their fringes because they knew, like, after 3 or 4 months they would gonna get married and they would have to pay more for it. But after that trend finished, like, we actually saw the demand is diminishing.
Hoarding, a lot of hoarding, I guess. I should have asked you this earlier, and maybe you showed in the slides, but just to remind everyone, how much was how much did the Turkish index rise last year?
Around close to 200%.
Okay, yeah. So just a reminder for when the Turkish market went up 200% last year.
But
I don't think everyone remembers that.
You have around 100% inflation, so
yeah. So, but it's even you deduct that, it's still pretty good. I guess in US dollar terms, maybe it's up, I don't know, 80% or something.
It still produced a good percentage of profit in terms of US dollars too.
Yeah. Okay. Yeah. Sorry. Just to go back, just one last part, or maybe one. How did real estate, not so much as equities related to real estate, but how did real estate in general perform? I guess that's one other thing probably attendees want to understand. But, like, how did rental go? How did, like, property prices move?
The property prices after the depreciation started moved very quickly to catch the inflation. Actually, it moved before the inflation. It moved in terms of the expectations, not the actual data. But the expectations turned out to be right, and the price increases, which were really high, really rapid, actually turned out to be slowed down after a while, but it reached a really high point first before everything else turned some profit in Turkey after the depreciation. The first was used cars and real estate. But then after that, because the prices were so high and the interest rates, commercial interest rates actually started to go up a little bit, not the policy rate. The policy rates still went down, but the banks didn't find it profitable to give money at that cheap rate. So it started to go up, and then we saw that the trend, the buying in the real estate cooled down a little bit. Now we see that the prices are not moving up. They are actually waiting for the construction costs to catch up, etc. But after the first move, we saw that because the interest rates were still low, the investors were left without a choice, because the real effective rate, the interest rate was below the inflation. So if you put your money in the interest, you would actually lose money after a couple of years. So the real estate, as I said, went up really quickly, and then just steadied out. Rents went up dramatically. I can't even explain, like 5 times.
Oh, 5. Oh, sorry. Okay.
But
Okay.
you actually keep in mind that we had an actually huge earthquake in the eastern parts of Turkey.
Okay, yeah.
So it actually changes the supply demand. Okay,
thanks. Just one last part for me before I move to Thailand and the Thai consumer sector. I just want to understand, does the market punish Turkish companies with high gearing? I understand, because the interest rate is lower than inflation, but did they differentiate, or this company is very highly geared and interest rates are so high, investors will stay away, and that wasn't really a consideration? They didn't really matter. They didn't really differentiate a company whether it had a lot of debt or a lot of loans. That they didn't really.
No, actually they did, but the thing is, inflation also helped them, the companies with huge debt, because if they could keep their performance, not to improve it, but keep their performances within the same level. Think about it. You have a $1 million of debt, and you're producing like $2 million of revenue. Like, the numbers are all wrong. I'm sorry for it. Now that because of the inflation, let's say, as in Turkey, there is a 100% inflation, and your revenue just went up according to that. Now you're making 4 million of revenue with 1 million of debt. So the ratio actually becomes favorable for you. If you can continue to improve your EBITDA, now along with the revenue, now because the amount of debt you owe is stable, but the inflation helped you with the increase of EBITDA and revenue, the ratio becomes favorable in terms of the company.
Okay, understand. Yeah, you can raise prices faster than the interest rates. I guess in a way, so you can. That's the value of the debt actually goes down.
Thing is, thing in Turkey is different, because like globally we see that the central banks, to cope with the rising inflation, they're raising interest rates, but the Turkey went contrary to the global trend. When everybody was raising rates, we depreciated our money with lowering rates. So this situation is somewhat little different.
Okay, got it. Thanks so much for that color, Ali. So we're just going to go one more round to Thailand and then back to Turkey, and then we will move on to the questions. So I guess the next part of will be just on Thailand. So in Singapore, we are especially familiar with just one Thai company here, one large one that's part of the index. Thai Beverage is listed here. So I guess for most of us Singapore investors, we just also want to understand, like, how is the state of the consumer spending in Thailand, or whatever you can share, be it retail or the income growth or income levels. How is it performing in Thailand? And probably for Thai Bev, they'll be especially sensitive to maybe farm incomes and so forth. So Chutikan, over to you if you have anything to share. Thanks.
Okay. About the Thailand consumer spending state, we look at the purchasing power of Thailand. If we look at GNI, gross national income per capita for Thailand, World Bank upgrade by country income category to range of an upper middle income economy since 2011. For this GNI per capita, which around 13.2 US dollar, and for the last year, For the GNI per capita, I think we go from 20 and 18 around 9%. So annual growth rate around 5.2%. I think the GNI would grow continuously, and for the increase of the average monthly wage, overall average monthly wage in Thai rose around 9% from last 5 years, and around $440 per month in the last quarter. And average monthly wage outside the agricultural sector is go around 7%, and for the agricultural sector go around 12%, from 12 from 5 years ago. For the retail sales, latest data show that retail sales in the last quarter jumped around 7% from last year, and improvement of consumer confidence that 9 months trend of growth and highest level in 3 years in the February. Okay, and since country reopening from the COVID-19 pandemic, and improvement result from recovery of tourism and consumption, economic stimulus measure, and increasing of crop price, foreign retail oil price, and slight batch weakness. So from the whole picture, that I think will support the consumption in Thailand. And about the Thai bev company, as for the Thai stock market not allowed the alcohol concerns company to list in Thailand. That why they moved to your country. So it's difficult to search for the details of business about the alcohol beverage. So, but in terms of the company, consumer company like retail company, that I think maybe the big name in Thailand, maybe I let you,
Okay, sure.
Mr.
Yeah.
Adisorn, to tell you about that.
Oh, okay, yeah. So I guess that you mentioned the strong consumption spending has recovered. So I just wondering, just for the investors here, like what are some of the consumer stocks that they should look at in the medium term? Like maybe those that have very strong brand names, be it in Thailand or also internationally. Yeah, thanks, Adisorn. I think you're still muted. Yeah, Adisorn, I think you're muted.
In my opinion, CPO could be the one of the Thai consumer stock that investors should look in the medium term. Yeah, CPO is business profile is very solid. They leading the market position in both convenience store and cash and carry business in Thailand.
Sorry to interrupt you. So just for the benefit, I think that is 7. CPO is a
7-Eleven operator.
Yeah. Okay. Just for the benefit, I don't. Just in case some may not actually know who CPO is. Yeah. Thanks, Adisorn. Sorry to interrupt you. Yeah.
Well, convenience store business is operate a convenience store chain, 7-Eleven, as you said. Yeah. CPO has been granted the exclusive right from 7-Eleven USA under the area license agreement to be the sole operator of 7-Eleven in Thailand. And they had almost 14,000 stores nationwide, and they will add at least 700 new stores a year to portfolio. Yeah. And 7-Eleven store make up around 2/3 of all convenience stores in Thailand. CPO is one of the most successful operator of 7-Eleven store globally. 7-Eleven also CPO also had a leadership position in the country cash and carry market to its 60% or subsidiary of Macro. Macro is Thailand's largest cash and carry operator with a nationwide network of 149 stores, and it also operates a retail business and manage rental space in Thailand shopping too. We think the CPO is can grow global. Yeah.
Okay, sure. Thanks. So I guess your main pick, at least for the medium term, for investors, for consumer, is CPO, the 7-Eleven chain. Okay, thanks for that. Yeah, I think we will come back. I think there might be some questions for you later. I'm not sure you can address them, but we'll just go one more round on questions with Turkey before we take on the Q&A. So my last one for Turkey would be, for investor in Singapore, of course, we're all tourist investors. We're not that familiar with Turkey, but what would be some of the stocks that you would prefer, at least for the medium term, in view of the currency volatility and so forth? But what is, in the medium term, what kind of names would you kind of point investors to? Ali, yeah, for you. I think you're muted.
Yeah, I was muted. Can I share my screen to show some numbers?
Sure, go ahead, please.
Okay. So, okay. We see the data for BİM Birleşik Mağazaları, which is an actually food retail market, a discounted food retail market. I wanted to share the numbers because you can see the effect of inflation from the numbers. When you see the revenue numbers, as I said, 2021, when the Turkish lira depreciation started and the inflation kicked off, you see that the amount of revenue doubled. And actually, we see the trend in revenue continue in 23. The thing is, now in 2022, the Turkish investors had no alternative other than stock market. As I explained, the prices of real estate and the other investment choices went up really early, and the stock market really left with low valuations, and it provided the only alternative to investment because the interest rates for deposits were so low in Turkey. But now, starting from the 23, we see that actually the policy rate is still low. Don't get me wrong, but the commercial banks started to give more than 20%, 30% interest rates on deposits. So now people are starting to get an alternative to stock market. So it will be a harder year for Turkish equity market. But we have some really good choices where we see the demand trend continuing, and actually the food retailers, especially the discount ones, have an advantage of pricing because they are selling food. They have to like buy and sell really quickly, store in a close timeline. So they have actually the advantage of pricing. And because what they are selling is not discretionary, people have to actually buy, continue to buy bread and onions. And because it is a discount store, it actually can offer lower prices from its competitors. So we actually see the growth trend in revenues continue in 23. We see that a little bit EBITDA margin shrinking, but it is still in a very attractive place. We see that in 2020, the price to earnings ratio for BİM Birleşik Mağazaları was 16.4, but now it is around 10%, And we see that because of the trend will continue in 23, we see that it will drop to 8.3%, which is actually very, very attractive. This is one of our favorite stock picks. Akçansa is a clinker cement producer company, which actually has a international presence too. It has a it actually exports to 24 of its net sales, which is a good percent. And the largest export market of the company is USA with 59% share of its international sales. It has actually a US company as a partner too. We see that actually the EBITDA margin is shrinking. It is because of the rising energy costs. You know, the cement production requires high energy. But now, starting from 23, we see that the energy prices are actually going down. So, and construction costs in Turkey is still very high. So we see that the EBITDA margin will improve to its historical levels. So with the continuing trend of revenue improvement, we see that this is a good pick with around 45% upside. Actually, I want to show the BIM for that matter too. We think that in 23 it will provide around 53% upside for the investors, which is actually good because we expect the Turkish inflation rate to drop around 20% when we go into 2025. And actually, we also think that Pegasus Airlines will provide some good income for investors in Turkey too. Like its peer, Turkish Airlines, just like moved from 11 to 110 in a very close timeline. We see that Pegasus Airlines is not yet there with its peer, so we expect that it will catch up to Turkish Airlines. You see that after the recovery from the pandemic, actually the return numbers, revenue growth and return numbers are really good. We see the margins are returning to the 2019 levels, especially because of the currency depreciation. We expect that the tourism will be good in 2023, and Pegasus Hava Taşımacılığı, Pegasus Airlines, which also has a strong presence in local transportation, will profit from both sides, both from internationally and domestic travel.
Okay, got it. Yeah. Okay. Okay. Ali, did you have any more, or did you more to share, or should we just move to Q&A? Oh, okay. Oh, sorry. Go ahead. Yeah.
Yeah, I'll do one more, not to take up much more time. This is Vestel, the company, one of the companies that I told you about, which has an international presence, especially in Europe. Even though it was not very favorable for the electronic producers, the global trend, and because actually Vestel has a huge international presence, it didn't actually, it actually affect badly from those sides in that too. But now we see the margins are growing, and the 23 EBITDA growth and EBITDA margin expectations are good. Actually, Vestel has a different story too. electric cars in Turkey are just starting to get used. We have a government-backed project, which is TOGG, and they started to take their first orders. And now we see that Tesla is started to take orders in Turkey to actually start delivering electric vehicle cars. Vestel is the one company that produces the electrical charge stations in Turkey. Vestel will not be operating the charge stations, but it will provide the means and the equipment to build electric vehicle charging stations. And because it is a niche and new sector in Turkey, we believe that the Vestel is really well positioned to get a good cut from the electrical vehicle expansion in Turkey.
Okay. I guess Turkey is the ultimate TINA market. There's no alternate until interest rates caught up. But there's a lot of operating leverage. I think when the inflation hit, like you can see, the revenue is up 80, but the earnings growth is multiple times that usually.
Yeah.
Except for this particular, but the rest you could see, revenue up 100, but earnings can up 4 or 5 times. Oh, okay. I think we might have to move to Q&A.
Yeah. 1 second. Yeah, thank you, Paul, Chutikan, Adisorn, and Ali for the insightful discussion. Now we've come to the Q&A session. Speakers, take it away. Thanks, Paul.
Okay, thanks again, Roshan. So again, just to remind everyone, if you do have a question, I guess we have another 13 minutes, so we'll try and take on all the questions, those that has been the most upvoted. And the first one, I know you touched a bit on Thai Bev, but I'm not sure if Kun Adisorn can maybe have anything else to share. So let me just read out the question. Kun Adisorn, can you give your view of Thai beverage presence in the Thailand market? Where do they stand against many other competitors? Thanks.
Yeah, thank you for the question. Thai Bev in Thailand is the #1 market share in the liquor business. That market around 180,000 million baht. But in the beer market, the Thai Bev is the second market share after the Bullrod Brewery that has market share around 34%. The total market of the beer market is around 260,000 million baht. Yeah.
Thanks. Okay, thanks for that, Adisorn. Let's move on to the question for Turkey. I know you touched on it a little bit, but maybe a bit more clarity if it's possible. In Turkey, which industries are doing better than the rest? I know you mentioned it, but I'm not sure if you got anything further to add, Ali.
Yeah, in 2022, we saw electric producers and airline companies and financials produce good results. Now, this situation is changing as we see global trends affect Turkey, and Turkey has a unique situation on its own too. So we actually, as you could see from our stock picks too, we actually think that the companies that could like keep their margins, improve their margins, or keep it flat would benefit from the situation right now. So that's why we strongly suggest Bimash, which is a food retail discount store, which would benefit from the macroeconomic situation in Turkey.
Okay, thanks. I'm going to jump the questions a little bit. Maybe at the bottom, I'm not sure if Adisorn can take on this. Maybe for both countries, how are the new platform operators seen in both countries? I guess they're talking about ride-hailing. I don't know. In Singapore, here is called Grab. No, just whatever you can share with you first, Adisorn. What is the scene like? I guess in ride-hailing, e-commerce, and food delivery. Thanks.
In Thailand, we have the new food delivery platform called Robinhood. It's that operated by the Thai Commercial Bank. the subsidiary of the Thai Commercial Bank, but the market share is lower, still lower than the GrabFood or Lineman.
Oh, it's set up by a bank. It's a bank setup. Okay.
Yeah. Is the subsidiary of the Thai Commercial Bank or SCB Bank.
Oh, okay. Some commercial bank. So the most popular ride-hailing and food delivery is still Grab, is it? Or
Yeah. Grab and Lineman.
oh, Lima. Okay. Sure. Thanks. Okay. Thanks for that. Adisorn. What about Turkey? I guess this was a question for both countries. Like is food delivery, ride-hailing, e-commerce, like how popular is it, and who are like the leaders?
Well, actually, the delivery sector in Turkey, we have some good companies with extensive networks, and some of which actually got private investors from international firms too. I was trying to find the news about it, but I couldn't. I'm sorry.
I think it's okay.
I think a Chinese company made some investments in one of the delivery companies, and actually, yeah.
So who's like the top food delivery or ride-hailing app in Turkey?
In terms of ride-hailing, this sector is not very developed.
Like I see.
Internationally.
Okay.
But in terms of food delivery, there is a huge, extensive network in Turkey. The market leaders are yemeksepeti.com and Getir, I believe.
Okay, sure. Right, yeah.
Both of them are not traded in the stock market.
Okay, too bad. Okay, I'll move on to this question again. It's also related for Turkey and Thailand. So let me just read it out. In both Turkey and Thailand, EV, is there any EV related or electric vehicle related company to look into? I'll hand it to Thailand first if there's any EV opportunity.
Yeah. In Thailand, we have the company called EA that will produce the battery producer and charging station. And Sitang STA is they made the national rubber that will make the tire.
Okay, so you have a battery and a tire maker. Okay.
Yeah.
Okay, got it. Thanks for that. I'll hand it over to Turkey, Ali. like any electric vehicle related companies to look into, or what is listed?
As I mentioned earlier, the Vestel electronics company is producing charging stations. I think it's a good investment if somebody wants to invest in electronic vehicles in Turkey. And actually, we have a Turkish-American partnership of Ford, Frotto, which actually produces cars that will be delivered to Europe and the neighboring countries of Turkey, which has a strong production base in Turkey, and actually they produce They will produce electric cars for Ford too. I think these two choices are what you want to go for in terms of electric vehicles in Turkey.
Okay, thanks for that, Ali. So I'll swing back again for a question for our Thai colleagues. Any comments on Sri Trang Agro and Sri Trang Gloves? I think one is a rubber plantation, other is a rubber glove maker.
Yeah, on Sri Trang Agriculture STA, first quarter this year performance of STA is not quite good. Our analysts expect that the profit will drop quarter-on-quarter and year-over-year because Chinese customers rolled out the order after they order a lot in the first quarter last year. For the Sri Trang Group, they can raise the price of the globe cost. National rubber price is increased, but that we think the rubber growth is price still lower than the last year average price. Yeah.
Okay, all right then. Thanks for that. Okay, this is another question, but I think this is more at the personal level for you, Ali, or for Turkey. The question is really curious how Turkish people or citizens, cope with such a high inflation level. I mean, I probably don't have to put your analyst hat. Just put on your your Turkish citizen hat. Like in general, how do most people cope with the rising inflation? Just your thoughts. Yeah.
Well, it is going hard because, as I mentioned earlier, the rent prices in big cities just went really doubled and tripled and quadrupled in a short amount of time. And actually, some of the people can't get the raises they want according to the inflation rate. So we see that people changing their employment really quickly to match with the prices, market prices. I believe it makes people it makes things harder to work together and etc. Because when you're working, you want to work. You don't want to think about your earnings or income every 5 minutes or like every month or something. But as I mentioned earlier, the inflation was always there for Turkey. Like every 10 years, a huge inflation wave comes around Turkey, or every 15 years. So even though most of the young people didn't live through an inflationary period, they certainly have heard about it from their peers, from their colleagues, and from their mothers and family. So they actually know how to cope with it. As I mentioned earlier, when the Turkish money depreciation started, everybody, because the loan rates were low, everybody took loans and buy some property, because they knew the amount they will pay would amount less in the real terms.
Okay, yeah, they just want to keep cash. They just want to deploy it, like you said, in any asset class that they could find. Yeah. Okay. Okay, thanks. Okay, I think in view of time, we're just going to take maybe one more question for Thailand. Then I think the rest could be Turkey. We just take one or two more questions. Okay, I think this is more a housekeeping question. I think what is the time span for comparison of Thailand stock market? I think it's probably referring to your chart, Chutikan. I'm not sure. The chart earlier, the performance, was it for the year, right? I think yours was for first quarter 23, if I'm not mistaken.
For a comparison to the global peers, right?
Yeah.
Oh, okay. I look since 2018,
Okay.
around 5 years ago, for the average PE.
Oh, okay, sure. Okay, sure. Thanks. I think that was more of a housekeeping question. I think we just try to wrap up whatever questions. I think it's all mainly for Turkey. Okay, I'm not very familiar. I'm not very sure what this particular question is, but let me just read it out. Inside the index, the BIST, which is the Turkish index, can I know any Singapore or China or US partnership, and how is their performance? I'm not particularly sure what actually any Singapore or Chinese yeah, I'm not sure how to interpret this question, but Ali, any thoughts on that?
Yeah, I believe we have ICBT in our stock market as a Chinese company, but it is not very liquid. Like the investors doesn't show real much
interest. Oh, okay.
Because it is illiquid.
I see. Okay. So there is a Chinese company listed in. Okay,
yeah, the bank ICBC.
Oh, okay.
ICBC.
ICBC. Oh, okay, that's strange. Okay. Yeah, I mean all the liquidity is probably in Hong Kong. Yeah. Okay. This question, hi Ali, missed the earlier part of this webinar. How would you rate Turkey stock market? Very volatile. Well, I think it went up like 2 times. Risky, rated from a scale of 0 to 10. What are the good opportunities that are undervalued and worth looking at? I think that part you already answered. So I guess
what I can tell is, yeah, we have an earthquake situation and elections are coming, and you know the macroeconomic situations are hard to read when the numbers are changing so rapidly. But the thing is, when you look at the valuations of Turkish equity market, it is still historically very low compared to all the EM comparable partners and the global stock markets and S&P, etc. It is really cheap in terms of valuation. So it provides an opportunity compared with the time you have to spend in these stock markets. But I believe it will provide some good returns on the long term, apart from the expected volatility in the short term.
I think we've hit the 2:30 mark. I'm just going to randomly, because the other question is related, like how long has PhillipCapital been active in Turkey? I think this one you have to probably just ask the rep. I think we've been there for quite some time. But let me just take this last one. Do not want to hold our guests from Thailand and Turkey. Just one last question for Turkey again. How does the Turkish government handle the Ukraine war and the US pressure? I guess this will be our last question for today before we wrap up. Ali, over to you.
Well, actually, Turkey took a diplomatic stance in the matter, into that matter. From the start of the situation, the Turkish government saw and talked with the both sides as a sort of negotiator, but it actually served some good purposes, like the wheat agreement, as you may know. If you remember, if I remember correctly, you know, the wheat transport from the Ukrainian area has stopped because of the war, and with the Turkey's help, the two sides were able to negotiate a sort of truce in terms of wheat, so that the wheat could be transported from the shipyards in Ukraine.
Okay. So at least there was some wheat exports that Turkish helped to push. Okay.
It was a globally important thing. I mean.
Yeah, that's true. Okay, then. Okay, I think with that, again, we like to thank all our attendees here. I think I'll hand it over to you, Roshan. You want to